How's it going, everyone? This is Israel, your loan officer down here in Southern California. Today is February 2nd, 2021. And well, if you have been following this channel, you know towards the end, I basically give my spiel and, telling you guys, take advantage of these really low interest rates if you're thinking about refinancing. Well, today on this video, we're going to see who should really refinance. Again, refinancing, even though the rates are really, really low, it's not for everyone. And in fact, on today's news, this is what we have. Refi demand staying strong despite rising rates. Also, is now still a good time to refinance a mortgage? The next graphic that I'm going to show you breaks down just 4 simple questions to see if you should really refinance, or is it really worth refinancing? So let's go ahead and take a look. We're going to start with who should skip the refi. All right, question number 1, purchased before 2019. What do I mean? I want to show you this graphic here, and this is the 30-year fixed rate mortgage average in the US. If you could see here, the dates are 2018, 2016, all the way down to 2018. We're not going to go all the way down there, but you guys can kind of see this, get a feel of how rates have been behaving. But if we take a look really close down here, I'm not sure if you're able to capture that. November 7, 2019, you could be getting a 3.78 interest rate. And if we back up a little bit, it keeps going all the way up, 4.37 back in February 14, and it reached almost 4.9 in October 11 of 2018. So the question, if we go back to our graphic here, is the following. If you purchased or even refinanced before 2019, chances are that you are a pretty good candidate, because as you saw just from the averages alone, chances are that you have a higher interest rate. Now, the second question ties into the first one, and that is rates higher than 3.5. As you saw, if you purchased or refinanced before 2019, chances are you do have a much higher interest rate. But not only that, in fact, I had a client that came to me. We ended up doing the numbers. He wanted to refinance, and ultimately I told him, listen, it doesn't make sense. Yes, you're going to be saving about $200, but the amount of money you spent on the previous refinance, you haven't recouped it yet. You still need about another year or so to have, recoup that amount of money that you ended up spending on that previous refinance. And so after he saw the numbers and he noticed that it didn't really make sense. And so you do come across these scenarios where, yes, you could be saving $200 or maybe even more. But again, is it really worth the money that you're going to be spending in regards to the closing costs? Title, escrow, lender fees, property taxes, everything that goes into a refinance, you really have to weigh in those costs as well. And so moving on to the other question, this is if you plan to stay over the next 3 years in your home. If you're just going to be purchasing this home and within 2 years you're going to move out or you're going to refinance, I'll be the first one to say don't. Just don't, because you're just going to be spending more money. Yes, you'll psychologically feel that you're lowering down your mortgage payment, $200, maybe $300. But if you do the numbers, the amount of money that is costing you to get that savings, you're going to have to stay at least 3 years in that place. Now, again, there are the scenarios where emergencies can come, right? Medical emergencies or just personal issues that we might have. And we have to tap into our piggy bank, and that being our equity in our home. And if we can, we'll lower the mortgage payment while we're at it. So I understand that part. But if you're just coming to me and saying, oh yeah, we just want to take advantage of these really low rates, I'll definitely sit down with you and go over to the pros and cons. And again, numbers don't lie. I'll put the numbers in front of you, and if you do want to decide to take the step and refinance, it's your decision. At the end of the day, I'm only here to advise you. And the last piece of information is this, or last question, is your loan an FHA? Okay, FHA, conventional. Later on this video, you're going to see the two differences as far as interest rates. One of the things that I love about FHA is that there is this one particular program. It's called FHA Streamline. And basically in FHA Streamline, this is the logic of the banks. If you can get your client to drop their interest rate 0.5 then they can totally qualify for this program. Now, what's so good about this program? Well, number one is that the fees are that much lower. In fact, one of them is the appraisal cost. As you know, when you purchased or when you refinance, the banks ask for an appraisal report. That usually costs anywhere from $450 to $500, depending on what area you're in and how large the house is. And so under this program, it says, no, you don't need one of those. Great. Among other fees that are much, much lower. Not only that, if you purchased or refinance under one of these programs, let's say a year or 2 years ago, there's this thing called upfront mortgage insurance. It's basically a fee that was charged to you when you originally purchased or used this program. A lot of people never heard of it because it always gets tied or tagged into the loan, and so hardly anybody knows about it. But the thing is, that money that was spent or allocated to your loan, well, it's like a bucket, and every month it keeps going down. If you've been on that property for, let's say, a year, well, that bucket still has some reserves there, some reserves and profit, some money in there. And so when you refinance, if we do the calculations, we could use that amount of credits and apply them towards your closing costs. Hence, your closing costs will be that much more cheaper, lower. And ultimately, all in all, you wouldn't be spending so much on your new loan. And yes, then it would make total sense to be able to refinance. Now, there's a pro and there's a con, right? The con is, if you're thinking about, hey, great, I want to use this program, and Israel, while you're at it, can I pull about $30,000, $40,000, $60,000 out of my equity? Nuh-uh, you can't. The banks say, look, this is to help people that obviously are under these programs, and the objective is to continue to help them. So we don't want them to go more into debt. So no, cash outs, out of the question. Just don't even ask. So that's the only caveat, that you cannot do any types of cash outs under the FHA streamline. All right, and now let's go on to the mortgage-backed securities. Our day was pretty quiet, 2%, not a lot of activity, and I think that was reflected on the interest rates for today. So let's go take a look at the first program, and that's going to be the conventional 30-year fix. All these rates are 30-year fix, and they require a 20% down payment on a purchase of a home. These are the rates that I was offering on yesterday versus the ones from today. The only ones that saw a little change were the people with the 700 range FICO scores. They're looking at 3.125 for a 30-year fix. You can pause the video and take a look at what it is that other banks are offering. FYI, other banks are offering with a 740 FICO score. Okay, so you need that 740 to be able to grab one of these interest rates. All right, move on to the second program, and that's going to be the FHA. 3.5% down payment. That's the only down payment you're going to need versus the other program that were requiring a 20% down payment. All right, and here 740 FICO scores. Anybody that has those or higher than 740 looks like they're able to get a 2.375 interest rate as of today. Look at the competition. Again, they require you to have a 740 FICO score. Their lowest number is Citibank with a 2.75. Here with us, oh geez, we're even beating it with a 660 FICO score. We can offer you a 6.625. So something to keep in mind. All right, to finalize this video, I'd like to thank you guys again. Here he goes, right? If you're thinking about refinancing or purchasing, give us a call at 661-388-7667. But not only that, if you do call, we'll run the numbers. It's my responsibility, to say, look, it's not going to make sense, even though you're going to be saving 100 or 200 or 300. I'll put the numbers together and I'll give you my opinion, my honest opinion. If you decide to move forward, then so be it. But trust me, I'll definitely give you the best advice that I can possibly provide you with. And so with that, to all our homeowners, if you are thinking about putting your house on the market or just want to know what the amount of equity that you currently have, give us a call. We have a great team of professional realtors that will be able to help you on that. You just got to call us at 661-388-7667. And may God bless our nation. May God bless you. And I'll see you guys on the next video. Take care. Bye-bye.